the All Funds Investment Podcast explores those making investments in the alternative asset landscape, as well as the vendors who service these funds. We provide resources for emerging managers and insights for those in the alternative fund space. This podcast is for informational purposes only and should not be relied upon for investment decisions.
Welcome to the All Fun Investment Podcast. My name is Mike Schroeder. Today we're here with Nilesh Sudrania. Nilesh, how you doing?
Excellent. How are you?
Doing great. Thanks for joining us.
Sure.
Just to get the conversation started, you mind telling us about your story and how you got to where you're at today?
Definitely. My story is long, but I'll try to keep it short. My experience or background or career, it's in fund administration. So I worked with a fund administrator roughly 15 years, and then about 1 year with a technology company in New York. And then I started what the company today is 6 years ago, originally as a technology company. I thought we'll build the technology for fund administration that would be, basically a marketplace where fund administrators can come on one side and fund admin service buyers could be on the other side, more like Uber of fund admin. So we built technology or software solution, but the whole concept was too new, or nobody wanted to just go random shopping for fund admin. So it didn't work. So I thought, let me go institutional, and I can now sell it to fund administrator as a tech solution. Back then, 6 years ago, 5 years ago, cloud was still scary, and I wanted to remain 100% cloud, thinking that is the future, and I didn't want to dilute our vision at that time. So didn't get much success with the cloud tech solution. So 4 years ago, we pivoted to becoming fund admin ourselves. So essentially, I just became my own customer, bought the technology, and I said, we can now go out and sell services for fund administration. It just worked out great. It's got a lot of traction. You worked with us, great 3 years, and we experienced exponential growth. Both because of technology, but of course because of the overall market conditions, the bull market that was happening. So overall things worked in our favor, and last year was exceptionally good for us. We had, I should say, 700% growth, and it's continuing. I mean, it's not going to be 700% this year, nonetheless.
Things are slowing down. Times are changing. Tell us about your full lineup of services. What do you guys do? Fund administration. Anything else beyond that? And tell us about the client base you guys work with as well.
Definitely. So we earlier, the vision we had was, let's become the Amazon.com of fund services. So we could do any service that you want, or any help you need, just come to us, right? But we narrowed our focus this year, or I can say starting with the fourth quarter of last year, we said that we need to keep some focus. So we picked really two areas. One was fund admin, of course, going great. So no reason to slow down there. And then this year we added our focus on technology sales. So it's something that we haven't done in a big way, but that is something we will be launching. We'll be publicizing a bit more to the marketplace and target market. We have two tech portals. One is, of course, the fund accounting system, and the second is our investor onboarding software. So for both of these, we plan to go out in the market, offer them to the end customers, which could be hedge funds or family offices, allocators, to use it for their purpose, and then eventually even offer these to other fund administrators so they could utilize these, make their operations more efficient.
That's great. So with the technology aspect, so this is everything post-trade, and now beyond just doing the fund administration, so you guys are going to license this out to, maybe a family office that wants to maybe do shadow accounting or something like that?
Exactly. Or the family offices are a great example. They could have investments in a variety of asset classes. And one thing that we always wanted to keep is no limitation of any kind. So we can cover, or our fund accounting system is coded with practically every asset class, any legal entity structure, any domicile, whether it's US, outside US, as well as any calculations that can be created on top of the raw accounting data. So giving that flexibility in an open system, so these end customers, small or large, can build their own application layer on top of our base layer. So that's our idea, where we offer our accounting and reporting solutions seamless as a platform, so to speak, that other companies can take, and they can build their own application, their own branded application on top of it. So that's our vision. And do the same thing with the investor onboarding portal also. There we have again become our own customer. We are launching our marketplace where the investors can find managers, managers can find investors. So we are offering this marketplace. We should go live, if not this year, then perhaps next year.
Got it. That's awesome stuff. So tell us about the fund administration landscape, in terms of different players out there. What does that look like, and how does Formidium differentiate itself?
Sure. So a lot of great companies in this space, old and new. 6 years ago, I could say that there's not enough technology. But I think today things are different. So it's not just us, but many other companies, they have done a great job of at least recognizing that more tech is needed, and then starting to look for alternates, starting to build technology, starting to build automation in this sort of post-trade back office ops. It's not where it should be, but at least it's happening. And it's not as bad as it used to be. It used to be dominated, if you asked me 15 years ago, this was more like a CPA firm type business. Mm-hmm. Hourly services, or billed hourly. So that thing has completely changed. So it went from a CPA business to an independent fund administration business to a more tech-oriented business. And where it's heading is, if you ask me 5 years from today, what do I expect? I think even today's model will not be relevant.
What does the future look like? I was going to get to it later, but let's jump into it now. What does the future of fund administration look like? And does blockchain play any role in that?
So I won't say that it will become irrelevant. It's just that it will not be as visible or as front-end service as it is today. In most part, fund administration is an important service because there are investors that expect a third-party administrator. They expect some internal controls. So if technology can provide those controls, whether it's by way of blockchain or other automation or other internal controls, then that intermediation is not needed. So then we don't need to be arbiters of truth here, to approve or reject anything. So I think 5 years from today, if blockchain is just one kind of technology that can push us in a direction where the intermediation is reduced or eliminated, and decentralization or disintermediation starts. Meaning we'll be doing the job, but we may not be visible. Nobody may know about us. Fund managers may not know about us, and fund investors may not know about us.
Yeah, just more so in the background.
And I think that's a better way. Think like your payroll service provider. It's there in every company, except that it's nobody thinks about who my payroll service provider is, right? And I think this is the future. If not 5 years, then definitely in 10 years.
Yeah, that makes a lot of sense. What are some considerations that crypto funds should be thinking about when they're choosing a fund administrator?
Yeah, crypto funds, it's interesting. 2 years ago, it was a brand new asset class. Funds were there, but in most part, 90% of the growth has happened in last 2 years, I should say. Right? And that was, and still today, there's not enough infrastructure, not enough institutional infrastructure, whether it's data sources, data processing applications, or solutions, or even trained staff, both in technology and operations. I think that's changing very, very quickly, to a point where I think there may be overinvestment relative to the size of market. So what has happened is, while I thought 12 months ago that it'll take 5 years to get to where we are today, the whole thing just got accelerated because of so much of overinvestment is what I think happened here, which is good, right? Now, that infrastructure that I didn't think will be there today, it's there. That hurts some companies because, now they need to figure out what to do with this airplane that nobody wants to fly, right?
Yeah.
But it's good in general for the industry because now they can have cheaper air tickets, so to speak. And it can make them more efficient. So hopefully that might result in bigger demand, perhaps more inflow of money, more projects, more investments.
Right, more use cases.
More use cases, exactly.
And for funds thinking about, coming, a new fund thinking about an administrator, what should they specifically be thinking about? Like when you're interviewing an admin or,
It's, just like any buyer, it's a buying decision, right? So you have to evaluate the product. You have to ask the right question that, if I'm buying something, if I'm going to be a user of this service or product, how will it work? Or will it even work? And I think that's where most of the mistakes are happening. So just reading the marketing material or brochure, that's not the answer. Or in this case, just hearing from somebody that we have 25 years of history or 50 years of history, that really means nothing in crypto world, right? And I think that's where I sometimes have hard time digesting that a buyer will rate history more than efficiency of the product.
Right.
Now they can still make the same decision. They can say that, you know what, yes, we do care for 25 years of history, and that's our decision-making point. But then they may lose out on product or efficiency, which is what they should be supporting, right? That's where they are investing. That's their whole use case.
Right.
So I think this is the one thing they should, the buyers or the fund managers, when they select fund administrator or any other service provider in this landscape, should evaluate. And there are a lot of good options. 2 years ago, the problem was there were no options in many cases. And I remember many of these webinars that were happening. Even we did some webinars 2 years ago. And the topic was, there's not enough supply of custodians. And today, I think custodians are just
saturated,
competing, and it's oversaturated. There's so much of competition that undercutting has started happening. So do you see the market quickly within 24 months has gone from no supply to oversupply? Same thing with other service providers, whether it's payment processing, technology, fund administration, auditors. Many audit firms now support crypto funds,
right?
Tax preparers. So that infrastructure, as I said, now it's there. Maybe not 100%, but a lot more than what it was 12 months ago.
Yeah.
So that's if you have so many options, why not go for the best, right? And you should not be asking about history. And most of these solutions are technology solutions. So you can actually touch and feel if the solution is there or what could be the end product. That's what I'll advise. In terms of pricing, I think all of these services are very competitive. So I don't think there is any bigger gap in pricing between one solution versus second solution.
Right. I know years ago there used to be very large deltas, but yeah, it seems like that's kind of narrowing, if you will. Okay, so when it comes to specifics in crypto, let's say like exchanges, I know I've heard that a lot of the exchanges have like issues in terms of like their API getting like data feeds. I guess let's start with that. What does that look like?
It used to be terrible 12 months ago, right? A lot of chaos, a lot of weak infrastructure, and probably this over demand was crushing the capabilities of these exchanges. Now there is not as much demand or as much pressure, so I think they are performing better. But of course, with time, they have also improved. So it's not as bad as it was 12 months ago. So again, as I said, things have improved dramatically. So that has made our job a lot easier. Not to say that it's now perfect and it's like click of a button and everything gets done. But I can definitely say that we have achieved roughly 70% more efficiency within just last 12 months. So much better.
Yeah.
There is this, and as I said, there are more solutions and there are more, well, for lack of a better word, intermediaries to help with data, to help with sanitization of data. In fact, one of the technology solution or part of the technology solution is we can provide that sanitized data back to anybody else. There are solutions to even go directly to blockchain itself and replicate the data or aggregate the data.
So like on-chain, like activity, like wallet transfers or DeFi.
So a lot of like going to the original source and then capturing the data is happening. We have started doing that. fetching data directly from blockchains, aggregating from there as opposed to going through other sources. But nonetheless, the answer is that now there are more choices. What we used to do by hand 12 months ago, it's not as much today.
A lot more automated.
Yes.
Now, in terms of like DeFi, like wallet tracking, I got to imagine to a degree this got to be a nightmare, especially for like high frequency, market makers. And even like just thinking about, new protocol comes to market, maybe there's a high yield and you got traders trying to get in. What does that side look like? How do you guys kind of deal with that?
So with what has happened with a lot of the DeFi protocols and the liquidity providers over the last 4 months, again, that pressure has gone down. New protocols are not as frequent as they were 1 year ago. So, we are not fielding a new protocol every week. So that has made our job easier. So in that way, there is a lot more stability. And the older protocols, older portals, they make it easier and they have gotten better in terms of their data aggregation. So DeFi is actually not as challenging as it was. Popular coins or tokens, it was always easy because you could get data from centralized exchanges. So that was always easier. DeFi was a bit of a challenge. But from what I know, our experience in the last 3 months is extremely positive. Not too many bad connections or data loss events that we were experiencing more often. Perhaps the size of data is not as much as we are fetching on behalf of our clients. So that could be one of the reasons. But the data issues are not as many as they were last year. Yeah,
things are getting better. Talk to us about in-kind transactions. Is that something you guys see a lot of funds doing? Is that something that there's demand from investors from? And how does that process kind of look like?
Well, now, in-kind or fiat both have gone down as you'd expect.
I imagine.
So it's still there. It's still more than TradFi. So that's a positive for the digital assets or crypto funds. It's not an issue as much, and perhaps that's one of the things where we have made a lot of processing capabilities, as in internal controls, checks and balances, education of fund managers, education of the investors, what they can do, what they cannot do. I think earlier there was a lot of friction because something that like private wallets, we discourage those, and the investors, they could not understand and why will we discourage private wallet or any subscription coming from a private wallet. So we started educating the managers and the investors why it doesn't work. Whereas they have started seeing a lot of regulatory talks along these type of internal controls. So I think they understand. So there's not as much of pushback, but the number of transactions is smaller. So that is also one of the factors why we are not getting as many upset customers about these things.
How is the market impacting clients? Yeah, everything's down. Stocks, bonds, crypto, the works. How has that impacted the market? What are you guys seeing out there?
It's very interesting question. So, if you had asked me that question in the month of May, I think everybody was worried, but everybody was worried for others, not for self. So we were like, I don't see any problem, so I'm okay. But let's see what happens to others. So the market as a whole was, and all the participants, they actually showed great resilience no nervousness. There was no sort of panic selling, so to speak. I mean, you saw some companies that needed bankruptcy protection or additional capital, but the market still digested everything, right? We will end the year with, I think, roughly 25, maybe 30% growth compared to where we ended last year. So despite all of this happening, we'll end the year 30% positive. And then as I think about it, I say, well, perhaps many other companies will also end the year positive, maybe flat, but it's not going to be 80% down. So the level of activity has gone down. Last year was 700% growth. So this year's 30% is nothing compared to 700%.
Right.
Nonetheless, it's larger than what it was 12 months ago. So I feel that stability is there. And I think the fund managers as well as investors in this asset class, they have more patience. They're like, okay, it's winter time to hibernate, no need to worry, we'll come back after 18 months. So
right.
That attitude is actually helping where nobody's panicking. Now, of course,
I think just the fact that we've seen it 3 years ago in 2018, like if you're still in the game, I feel like you had to at least experience some of it.
Exactly.
Even like myself as an investor, I feel like I've grown from it. Makes it easier.
Exactly.
What advice would you give to a new fund manager?
Well, for new fund managers, I think keeping patience is the key. Understand the asset class. Get education. The new fund managers, when I say get education, is really get education of the business. So you can be a great investor or trader for DeFi or coins or tokens. But running a fund is a different kind of business. So there are a lot of moving parts. There are a lot of third-party touch points. And it's a highly regulated business. So understand that many other service providers like auditors, for example, they are there for a reason and their hands are tied. So it's not like they make the call that I will allow this or I will not allow this. Okay, but your tax preparer, they really have only so many options. So they don't decide what to do, what not to do.
Right.
They really have their
Playing
own
by the rules.
Right? Same thing, fund administrator. We don't just sit here and decide that I like it, so I will allow it. I don't like it, so I won't allow it. And I think fund managers, younger fund managers, and first-time fund managers, they have a hard time digesting. They think that if I'm asking for tax ID or W-9 or picture ID, why do I need it? And I say, well, this is the kind of business where I have to ask for this information. And I don't really have a choice here. So we try to educate them. But if they understand that, we are in a business and this is our job, if we don't ask it, then we are not doing our job. And if we don't ask, then, we are not the right service provider for you. So you should be happy that we are bringing that control.
It's a great way to put it.
But I think managers see this as a hurdle, as bureaucracy, which I totally agree. But that's why you are hiring us, right?
Yeah.
So I think that's something, if people can understand, the fund managers can understand, that infrastructure is the key. Even in my own business, we worked for so many years together. And I always said that it's always about infrastructure. So we have to make sure we have all the right policies, procedures, internal controls, right technology, right people doing the right job. It does look bureaucratic, but that's the whole point.
Yeah.
The fund management is also quite a bit bureaucratic, meaning you need all of these bells and whistles. You like it or not, that's a different thing, but you have to have it. And sooner you understand, the better you are prepared for institutional allocations or bigger ticket sizes for the investments.
Yeah, no, absolutely. It's definitely something should be top of mind for all fund managers. Nilesh, this has been great. Thank you so much. Where can people go to follow you and connect with Formidium?
Well, you can find us on our website, formidium.com. I'm on LinkedIn. I think I'm fairly active on LinkedIn. And although I don't talk about, crypto or Bitcoins or fund admin, things like those, I usually talk about business in general or startups sometimes. But you can find me, Nilesh Sudrania, search me. Or you can find me on our website also, formidium.com. I think my contact info is listed there.
Awesome. We'll include that in the show notes. Nilesh, thank you so much.